All right, good morning, trade pros. We're ready to rock. Welcome to our morning market update for Wednesday, August the 12th. We got a lot of stuff planned for you today. It's going to be a pretty full one. So let's just dive right into this morning market update. The big news is yesterday gold was down at 1 point over 5.5%. It did settle at 1946, but overnight it's really dumped even further into these 1870s, 1875 area. Big spill in gold. And it's one of the steepest one-day declines since April 15th of 2013, and it's a pretty big day. It's more than 7 years, one of the biggest daily drops in gold. The biggest slide since March 13th. Other precious metals also took a beating. Silver down 11%, giving up all its gains since the start of August, as well as losses for platinum and palladium. So all precious metals, the whole complex was down. And it was down large. And, media outlets out there decided to print a lot of stories about why. It's the dollar. I saw some articles in Bloomberg saying, this weak dollar has created weakness in gold. That's wrong. It could be justified that way, or inflation expectations, or this or that. And everyone missed it. Nobody's going to print the story, but just too many people bought it. All right, retail was stuck long. And actually, I'm wearing this shirt today for that reason. This is a Stephen Box from our thing, quote, the retail bus is full. It's not the best design, but it's kind of fun. All right, and it's just what happened. Too many people were long at too high and elevated price. Gold had already made a significant run above its all-time highs, and I'm pretty sure somebody decided to take some profit. They said, look, it's time to take some off the trade. And when everybody that's wanting to buy an asset is already long, there's no more money willing to buy it. All right. And when everyone that's long sees it going down, or somebody starts to profit take, they say, I want to sell some of my position. There's no one to buy it. Fortunately, that's how it works out. And, we were able to catch this trade. It was pretty good in the room. One of our members, Chris, was just riding it all the way down. I think he probably even traded in the wee hours of the night. He's taking some time off this morning. But, it was a great trade. It was a great opportunity. I'm going to make a video about it shortly and post it up. I want you guys to see what was really the catalyst for me to fade it, because I got a really good, part of it was luck, part of it was, the expertise. I've been doing this for over 20 years, right? And I know I look young, but I just treat myself good. And so I've been, for the last 20 years or so, there's been a few trends that you see that are overdone that you have to jump on. Now you just have to qualify them. And usually selling an asset that's moving up so fast, the reason you're selling it isn't because you haven't bought it. All right, if the only reason you're selling something is because you're mad that you didn't buy it cheaper, that's a bad reason. That'll get you hurt. But if you look at it, you say, all right, I missed it. Let me just wait for an opportunity here to go. On the flip side of it, there's going to be a big pullback. I wasn't expecting it to play out this fast, but I was expecting a pullback to around 1975 to 1950. We got way better than that. I had some options or some puts, about just over $9,000 gain in 3 days. I'm happy about. I'm not saying that to impress you. I'm saying to impress upon you that there's a huge opportunity. And it took $8,000 of capital. I pretty much doubled up the capital I put in. But every time you win a big trade like that, it's one of my biggest trades, single trade, not days, but is that at the end of the day, it's like you always could have put more on, right? I had 12 puts. I could have done 15 in my mind. I'm like, what if I did 20? What if I did 100? But you got to dial that back. Don't be greedy. And I think gold's at a nice level for some pullback longs, but not yet. Give it some time. It's too early to be long, and it's too late to be short on gold. All right, so be very careful with the precious metals at the moment. I think we need a little bit more time to see what's going on these levels. Other news yesterday, stocks dumped pretty sharply into the close as Senate Majority Leader Mitch McConnell for the market, but Donald Trump's EOs now look even more beneficial, kind of helping him and his administration. But the discussions are a stalemate. That was very damaging for investor sentiment. We need some stimulus based on a lot of numbers. One of the reasons is 1/3 of renters can't pay their full August rent. All right, it's crazy. I know it's a nuts number. It's typically around 6 to 10%, so it's 3 times more. And here we are, almost at the all-time high on the S&P. But that's kind of where we're at. And other news outlets said that a lot of Donald Trump's EOs could be challenged. And so that's not, you have the EOs, and then now you have these these talks falling apart. Now, if the EOs are challenged, you don't have those, then you don't have anything. So it's pretty bearish for a market that's trying to put an all-time high in. All right. that's an important thing as well. Another news note today, we got a lot, and we got to talk about inflation because that came out this morning. All right. Is Kamala Harris of California is Joe Biden's running mate. This is great. She's the first woman of color to be nominated in such a role at such a high level of government. You know, it's fantastic. All right. There's a few thoughts I have on there that I don't want to. This isn't a politics show. We'll never be that. We're trading. So the reason we even bring this up is because there is an impact to the market should Joe Biden win this election with Kamala Harris as his running mate and VP. All right, here's what she believes or what her platform is. She advocates for a $15 an hour minimum wage. All right, she's advocating with their conferences and their testimonies. All right, we had one just a couple. I think it was 2 weeks ago now. All right, she's proposing a tax on Wall Street traders and derivative transactions. That right there is going to impact you directly in our community. So that's important to know. And also, she's using that as a platform to pay for Medicare and all healthcare plans. All right, so just keep that in mind. Supports the new Green Deal, but opposes Trans-Pacific Partnership and NAFTA, obviously. All right, so that's who we're working with. This is important to the markets because now this puts a little bit more platform onto this election campaign. And as we approach election, you're going to see a lot of volatility. On election night, we're going to be trading it with our elite team only in our elite trading room, and we're going to trade the whole event from like when it starts from 5 p.m. We're going to break it down, give you trading-based analysis, not just this is a poll number, you know, what it means, what the impact is. All the way last time, the last November of 2016, we traded up to like 2 a.m. I think with the traders. So expect the same this time around. Huge opportunity, big potential, 5-figure days, what we're looking for in that situation. All right, at least. In today's markets, Japan's up 0.4%, Hong Kong's up 1.4%, China's down 0.6%, India's down 0.1 of a percentage point. In Europe at midday, London's up 1%, Paris is up 0.4%, Frankfurt down 0.2 of a percent. It's London was the leader because the UK reported a 20.4% drop in GDP, officially putting it in a recession, and the largest contraction since records began in 1955. All right, so that's not a good look, and it's not a good thing. Other actually didn't do as bad. All right, I don't have the numbers in front of me, but it was between 10 to like 15%. The UK did significantly worse than anyone, and there's reasons for it. All right, but let's plow along because the most important part's coming up here. In the US, Dow's up 1%, S&P up 0.8, NASDAQ up 1% as well. Crude oil up 1.6, gold down 0.4 of a percent. It's stabilizing after running below 1,800 or 1,900 overnight. The other thing I want to mention about gold is I got rid of my trade yesterday. I had a feeling we go below 1,900, but I got rid of my trade yesterday because it was on options on the GLD ETF. So overnight is where a lot of the action happens on gold in the London session. Right, huge volatility there. Is the market for metals trading. And so holding a position that's US based overnight, even though it hits a certain level, you can't get out because the markets are closed in the US. All right, so you'd have to trade gold futures directly, which requires a lot of margin, a lot of capital. There's a lot of uncertainty. And so now that I'm out of the options, I'll probably be looking for a futures trade as well. All right, just a heads up on the reasoning behind that. Bitcoin's down 1.7. This morning we had mortgage applications. You could see real interest rates and yields are dropping. Mortgage rate right now is 3.06% for a third year in the US. Absolutely ridiculous. That's bonkers to me. The previous was 3.14, so there's a drop in yields there. There's a higher percentage of people filling out applications, and the refinance index has shot up as well. And so, purchase index is also up. So there are more people buying homes, refinancing homes because the rates are cheaper. It's actually a positive thing. And then at 8:30 came the big release, the CPI. This is the Consumer Price Index. This is the inflation reading. This isn't the measure that it is an inflation reading nonetheless, and it's important. All right. Core numbers were expected at 0.2 month over month. They came out at 0.6%, almost 3 times higher. That's a huge jump in inflation and double the high end of the expectation. All right, you got to remember the expectation was 0.2 to 0.3. The prior reading was 0.2. It comes out at 0.6. That's a huge jump in inflation. All right, and then we had the CPI, the headline number, also coming out at 0.6. It's the core number that's more important, because the core number excludes volatile components that fluctuate a lot. So that core number coming out at 0.6 is worrisome. What you got to watch for is the 10-year yield. Today it's going to be a big driver for stock markets. I already got it locked and loaded. If you don't, actually everyone should have this on TradingView. It's free to track along with it. It's US10Y, US 10-year yield on TradingView. That's the symbol. If you flip on a 1 minute, it's a big driver for today's trade. All right, the 10-year yield jumped up on inflation. When bondholders hear that there's higher inflation, they demand higher premium or higher coupon payments to be compensated for that inflation to make it attractive. Therefore, the yields go up and bond prices go down when inflation rockets higher like that. All right. There used to be a big correlation between yields and equity markets. It stopped working in 2019. I think at some point it would be one of the biggest trade opportunities to be long bond yields and short the market, but not yet. It'll catch up. It'll cross correlate. It always does. Just don't be long-term capital management and betting every single day that it will, even if it's going against you. Wait for the right time. There will be a good time for this trade. All right. Higher inflation reading, though, means that the Fed may cool off of its monetary policy. If the Fed sees inflation increase, the Fed thinks to itself, we're being too involved. We got to tighten policy, less stimulus, higher interest rates, typically. Now, Jerome Powell has come to the savior of the stock market and said, this time is different. If inflation ticks up, we'll allow it to overshoot its target, which is 2% on an annualized basis. Right now, we're at 1.6 on an annualized basis. We're not at the point where people are panicking, but it's a big jump in inflation. And here's the question: how much will they let it overshoot? Right? What would happen after it overshoots? Will they jack rates up, the interest rates? Because you don't want inflation to run away. That could be a really big problem. You can have an inflationary depression outright because of that. So inflation is a very, very tricky, sensitive thing. So what are you going to do? Are you going to tighten rates, or are you going to raise rates rather? Are you going to tighten the asset purchase programs you have? You have like 7 asset purchase programs, and you're buying bonds from corporations directly. So what are you going to do? That puts a lot of pressure on the Fed to have a response, and it's going to be discussed. It's going to cause a lot of volatility. Watch for that next meeting. The Federal Reserve, guaranteed 100%. Jerome Powell gets asked about inflation. Maybe one of the first 3 questions is that. All right, keep an eye out on that. This is significant. It's important. I think it's going to be missed by the media. I don't think people are going to talk about it because it's not sexy. It's not gold. It's not Bitcoin. It's not making big moves. It's just a boring old inflation that drives the entire economy and returns on bond portfolios. The bond market is multiple times bigger than the stock market. Remember that. Anywho, let's slide forward and end this with saying this. 10 a.m. we have Fed's Rosengren speaking from the Federal Reserve. 10:30 we have oil inventories. It's this time of the week where 1 hour, 1 day, you can make your whole weekly and even monthly income on oil. Lately, it hasn't been as good, but it's still great of a report to trade. You got to learn how to trade it, and I think we get some good opportunity today. All right, it's one of those things that will surprise you, and if it catches people off guard, there'll be a huge amount of volatility. So I have no expectations, but we're going to trade it today. We're going to get the move. All right, we typically do. You guys join us, check it out in the trading room. Other than that, we have 11 Fed's Kaplan speaking, 1 p.m., 38 billion 10-year note auction. All right, 2 p.m., Treasury budget, 3 p.m., Fed's daily, and then Kaplan's also speaking at 6 p.m. All right, on the U.S. economy and the ongoing impacts of COVID-19. There's a lot of COVID developments going on, but I can't talk about them on YouTube because there's a lot of sensitive people out there. Good job. Leo, look at this. Leo said, nice gold trade. Took profit too early. Put on he took a 4.8 thousand profit on gold yesterday. Man, fantastic. You're most welcome, Ad. The crypto Leo. I'm going to leave that to you, Leo. I don't want to trade crypto. For the amount of money and leverage, there's way more predictable volatility that could be traded. In my opinion, kind of an old school person. I like to trade traditional futures market where there's a lot of institutional money, because I trade order flow. To me, how the orders flow through the market is more important than anything else. And so I like to see people with big pockets making big trades on a regular basis. I find that the Bitcoin market's thin. When I looked at trading it, some of my transactions could have been moving the market, especially looking at the depth. It wasn't very. That's the only reason. Right? That could change. I'd love to try it out at some point, but I've never done a Bitcoin trade in my life. I had a short order at $20,090 US. Didn't trigger for a short. Didn't trigger. A ton of capital was required. Anywho, love you guys. Have a great rest of your day. No discussion on Tesla. No, it did a split. Big deal. So people who work there could buy shares cheaper. So it had 4-for-1 split. So Tesla will be trading 450-ish around divided by 4. All right. Consider yourself updated on Tesla. Love you guys. Have a great day. Be careful. Manage that risk. Trade like a trade pro. We'll see you tomorrow. I got to open up the trading room. I've kind of went way overboard with today's market update. Don't say I under-delivered. Take care. Love you guys. Bye. Boxy, let's get on with it with the oil trade. Really excited. I think today's going to be a great day for oil. I got a feeling we're going to get a great report, Boxy, on these oil numbers. It's going to be a whale of a trade. That's what I'm asking the market gods for. Over to you, and then we'll do equities after.